Right, back again. Obviously, if you watched my last video, this one's being filmed literally just after that one. I feel like my hairline's receding, you know. This one's being filmed just right after that one. So, obviously, I wanted to change the scenery a little bit. So I put myself over here, so it looks like a different video. But today I'm going to go through psychology because I feel like this is one of those really important things that aren't really spoken up about in trading. Most people, when they think about trading, they think about all the actual confluences, all of like the fair value gaps, the liquidity and stuff like that. But they don't realize that psychology has like the biggest factor in trading. Is one of the most important things to become a profitable trader. And obviously, I'm not that profitable, you know. Like obviously, I'm not a beginner now. I've been trading for a while, possibly just under a year. Probably coming up to it or something. I've been trading for a while now, and obviously, I put so much work into all of these confluences, but I never really thought about the psychology side of things that much in depth. Like, there's so much more to it than just all these like confluences. Like you've got all of that, but the psychology bit I think plays like a bigger factor than that. Because if you know how to trade, then you know how to trade. You know at the end of the day. But if you can't get your head around all these small things, then how are you going to be profitable? You know, like it's just these simple things which they seem simple, but they're not as simple as you think. So I'm gonna go through them one by one, and eventually I will do separate videos on every single psychology that I want to do those on my actual phone because the quality is a lot better on that. So the first thing which I find really important about psychology, especially in trading, number one will be doubt. So you may be thinking, okay, what do you mean by doubt? So with me especially, right? Like I'm just gonna put this as an example straight away. So as soon as I enter a trade, you watch every single movement after you've entered. As soon as you press that enter button, you watch every single movement, and then maybe the trade's going up a tiny bit, just retracing like the market does, and then you think, oh, shit, maybe I shouldn't have entered this. Maybe, and then you start overanalyzing, start overthinking everything, even though you took that trade for a reason. You start overanalyzing everything. You start thinking, and then you start doubting yourself. So you go on to you go on and you close the position like break even, maybe a small loss, and then you're thinking, oh, I shouldn't have done that. And then you watch it hit the take profit. It's one of those things. It's like you don't really think about it when you know how to trade, you know how to do the fair value gaps, like all of that bullshit. You don't think about this as well because doubt is literally one of the killers. Because I've so many times for me, I've entered a trade and then I'm thinking, oh, maybe this is not good, and then and then the same thing with like moving the like exiting the position. You can move the stop loss, you can move take profit, which you shouldn't technically be doing. Once you've entered a trade, you've entered that trade for a reason. You've set take profit for a reason. You've had a stop loss for a reason. You've entered where you've entered for a reason. So you assume you would have confirmation indicators and everything like that, and some sort of like reasoning behind it, context and like strategy. You've entered that trade, and most people say you should just leave it, let it do its thing. But as you watch the market, every single movement, it just keeps digging at your head. And this is what the market is designed to do. In my opinion, to get around this, you either just shut your laptop, shut your phone, turn do not disturb on, go for a walk, leave it, just completely leave it. Go for a walk and completely leave it. Come back the next day, come back in an hour to see what happened. If you lost, okay, you look at it and you think, okay, let me see, why have I lost? What happened? You go through the market, you've learned a lesson, you've won. Then you think, okay, why have I won? Bang, and it's that easy. I need to start doing this myself, but I know this is one of the best ways to do it. And I know a lot of people would be thinking, okay, but I want to just keep trading and like I want to make sure that this hits. And I know I used to be the same, and I still get that sometimes as well. But you have to just let it happen. Like if it's going to be a loss, it's going to be a loss. And if you're upset or you're scared about losing that money, then you either shouldn't be trading or you shouldn't have put that position aside because clearly you were not prepared or you didn't want to lose that amount of money. you were just risking and you were hoping instead of actually trading properly and strategically, and that's how people lose. Next thing I'm getting onto is impatience. This is actually another killer, especially for me. Impatience is absolutely fucked because you have to watch, well, you don't have to, but you watch the market for hours. So say London session lasts hours, New York session lasts hours, Asian lasts hours, and say you want to trade for the whole time, like maybe you want to wait like a few hours for your setup. Some people they get so impatient and they start thinking, okay, I want to take my trade now. I want to trade now. I just want to be in a trade because when you're actually in the trade, it feels like you're being productive. It feels like you're doing something. When you're just staring at the markets, you feel unproductive. You feel like I'm not doing anything. Maybe I should be entering. Then you start seeing the markets moving, and then you start getting like, oh, maybe I should enter here. But if you're patient and you actually waited for your setup or some sort of confirmation that you would enter, then you're most likely to be rewarded. This is what the market does. The market rewards patience. Most things reward and require patience. So with that impatience and you just want to just enter. Trading's not for you. Like it's quite simple. Trading is not for you if you just want to completely just enter of anything. It's it's simple. There's no better way to put it. Is that like impatience is just. I've got more notes here somewhere because there's other ways you can use patience as well. So even with okay, this falls into the doubt as well. So it kind of works similarly with doubt. So if you're feeling doubt, if you're feeling like impatient, maybe you just want to see it hit your take profit, you want to be out of the trade. All of these psychology things, they work together. Doubt, impatience, they work together. So you're feeling you're impatient and you want to just see it hit take profit. Then you start looking at the market, oh, come on, hit it. Then you start doubting yourself, you exit, and then you realize, fuck, I fucked up and I waited that long to actually take my trade, or I took my trade straight away. And then you want to just enter one straight away for revenge. And then you're just in a cycle of losing over and over again. I've been in that so many times, and thankfully I've gotten a lot better at that now. But impatience is like it's self-explanatory. Like if you can't wait for your setup, you can't wait for your setup to come, you can't wait for your take profit to get hit, then how are you going to be profitable? Next one, fear. Fear is. I could have sworn I've spoken about psychology before in one of my videos. Maybe it was my last video. I swear, did I? I remember talking about all of these psychology things. I can't remember I've spoken about it before. Maybe it might have been the one I'm editing now because I did speak about a lot of things on that one. I could have sworn maybe I've spoken about psychology before. Oh, okay. I did it in my Be Different one. So this one wasn't really focused on trading. Sort of it was, but I do remember that was my one called Be Different. That one was quite a mad one. I'm not going hard as that one, but fear in the market is something currently I'm going through right now because after losing so much, I had lots of confidence, not too much confidence, but I was confident and I was on the ball. I was just taking my entries, hitting trades every single day, smashing it, and as all of this has happened, I've started to get really, really fearful, and sometimes I want to wait too long to enter, and maybe I won't get my entry because I'm too scared to enter, or I enter a trade and I want to exit straight away because I'm scared that it might not hit or I might lose more money, which also works with doubt and impatience because you're not patient and then you're also doubtful. They all work together. Literally all of them, they all combine together. But fear is just one of those things like it will completely mess you up. It's not the worst, um, but it will ruin you, and it's just one of those things that you need to learn to control, and you need to learn to just kind of shut it down. And like obviously you get one extreme to the other, so you could be completely opposite of fearful, so you can be overconfident, but then you're losing so much, but then you could be fearful and you're not even entering trades. So there's a balance between each one. You cautious and confident, but not over fearful or not overconfident, if you know what I mean. So now we've got greed. Greed is one of those things. If you know, you know. You know what I mean? Like, okay, let's put this into example, right? So you've entered a trade and it's going, and then you see markets moving more and more and more, like they're getting more volatile. Maybe you want to enter another position because you think like, then you want to enter another position. You just keep entering over and over again because you want more and more and more. But you just need to follow a set trading plan. So you need to tell yourself, okay, I want to take 1, 2, 3 entries a day. I want to enter off this, this, this. I'm not going to use position sizes over this. Greed works in so many ways. So greed can be over leveraging, over like too high of a position size. It can be just entering off impulse. So with entries, you want to be entering off anticipation. So you want to mark out your. Let me just diagram this bullshit. So you want to. So anticipation. Say, okay, I want to enter down here. This is my anticipation area. And when price gets to here, I'm going to pay attention to the market and I'm going to be looking for entries on a lower time frame. So, the market's gone close to that. I'm going to go, for example, this is the 5 minute time frame. Just, like, okay, market hit it. It swept the Asian low. Now, where can I enter? Pretend this is a 5 minute time frame. Okay, you wait, and then say you see a complete break of structure over these two, and then you enter, and then bang, 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 you've hit take profit, whatever. So this is what I mean. Like greed is where maybe I was anticipating this because obviously I marked out the midpoint of this, but say there was nothing here, and say price just randomly, because price does this. Say price randomly shot up and it hit there. I'll say bang, you want to enter straight away. But then obviously in this case it was planned and it went back down, but it could have just kept going and going. And I've been in situations like this before, and I'm sure many of you have as well, where prices literally just continue going up and up and up. You haven't set a stop loss, and now you're fucked. You're just in a position that you don't want to be in, and now you're just waiting, but it's not going to happen. So greed is just right. It's one of the things that you need to get over. You need to understand consistency matters more than these big wins or trying to make some heroic trade where you just like you hit some crazy like 1 to 500 risk reward or something. You know what I mean? Like you need to have a set plan and consistency. Consistency is what this is my main thing. Consistency, like, it's the one thing that I aim for, and I don't like to go overboard and try take more than I should. The next one is high standards. So you see people on Instagram, YouTube, and you see them. They've learned their trade, and they've gone through everything you've gone through, and now they're making these big profits, like tens of thousands per trade. And you see that, and you think like you have high expectations. You're like, okay, I should be doing this amount of money. Then you put more on and you're greedy because you're just thinking about the money. You're not thinking about, can I correctly guess where price is going to go using these technical confluences. You're more thinking, how do I make the most money I can within the shortest space of time? Which that's a gambling mindset. That's not a trading mindset. High standards. A lot of these big traders, like these big YouTubers, they will there's not really their fault, I guess, because they've done it and they're just showing like that it can be done, and that's great because they're showing people that yeah, you can do this, like any normal person could do this. But it does set the high standards for people. They're thinking, okay, in 3 months I should be making the exact same amount of money, but realistically it takes years. You're not going to make this sort of money overnight, and it's not just going to come to you without putting in the work and effort. So you need to understand that it's like you see all of these big numbers, especially with yourself. So maybe say you've done this before and you've seen people make this amount of money, and you've somehow luckily you've made quite a big amount of money, very luckily, and you just keep trying to get to that same point again. You've set a high standard for yourself, which wasn't consistency, it was luck. and now you keep trying to achieve that level by using more money, and then you just lose money over and over again. You start getting smaller and smaller and smaller until you finally figure out that consistency is the only way to be profitable in trading. Like, you have to be able to be consistent over a long period of time rather than a week. Say you're consistent for a week and then you're not. So one loss theoretically does not matter if over time you are profitable. So obviously these people do set such high standards. So lower your standards, you won't be making that much money. You need to start off with either demo, or you need to start off with tiny position sizes, like maybe $50 or $100 or something, and you just, like, maybe you're trading like a few cents and you're just trading the percentages. So maybe say you want to start trying to do 1% and you want to try guess where price is going to go. That should be your main target. That should be your objective. Like, you're trying to guess where price is going to go, not I'm trying to make as much money as I can. So you want to start off with cents. So I always go out by a category of the numbers. So obviously you got your 5-figure trader, 10,000. Your 4-figure trader, 1,000. 3-figure, 100. 2-figure, 10. 1-figure, it's like £1 or something. And then you got the minus one, so you're maybe 10 cent or 10p, and then 1p. So you should be trading that 1 cent or 1p at the start. You should be trying to make maybe 3 cents from the tiny amount of money. You should just be trying to practice and learn how the markets move and how you can do it. So, and then you kind of just start leveling up, because I can go back way back onto my account and see where I was doing that 2p, well, 2 cent, 3 cent, and then you go onto my account now where I'm making, it's not a lot, $8 maybe, like, because I'm just trying to go for consistency now. If you when my trading plan video comes out, you see that it explains everything. So I'm now making $8, which is fairly good, I guess, in my opinion. And I've made, like, I've done trades of $20, and to see that progress and difference from like a few cents to like $20 a trade, it's kind of crazy to kind of witness that yourself, and you realize you don't need to be making these crazy amounts of money straight away. You kind of build up to it, like you work on, like, gaining capital. So in my opinion, that's more important. Next thing I'm talking about is hard work. So hard work is absolutely key. If you're not going to put in the work, you have to put in at least 2 to 3 to 4 times the amount of work that anyone else is doing in your niche to be profitable, or to be the best, or to work towards being the best. If you're not putting in the hard work, it doesn't matter about actual trading, because technically less is more of trading. You shouldn't be trading that much, but you need to put on the work outside of it. So you need to, in my opinion, you need to work on a plan, working on expenses, figuring out how am I going to do this percentages. And then you also want to be learning as well. Like, you want to be learning these different confluences, psychology kind of side of things, and you want to kind of build like your own course on, like, whatever I do. I use Obsidian. I'm building a whole course. I'm not going to well, I might one day, but it's kind of more for myself, and just to kind of like write everything down from videos, write everything down from websites and stuff like this. And then I also do my own research in the market. I write everything down, then I type it all up again so it reinforces it, and then I go through it on the weekends or something. I just try and learn and reinforce all of this stuff. So that's what I mean by the hard work. You want to put in that work. You don't want to just go into the market, you watch maybe one ICT video, you get onto the market, and then you're thinking, shit, okay, you trade for like a couple of hours, and then you just leave trading until the next day. If you're experienced, then yeah, cool, you do that because you know what you're doing now. But if you're still learning, then you need to put in that work, and then you're rewarded. You're not rewarded for going on guessing and hopefully getting lucky. You don't get rewarded for that in the markets. It just doesn't happen. So you need to put in that extra work. You need to put in that hard work to actually get the results that you want. Because most people, they want to get into trading for the money. Most people do, and that's why I wanted to get into trading, because I was tired of 9 to 5. I didn't want to do it anymore, so I wanted to go into trading. So if you really, really want it, and you know you want it, you have to prove to yourself that you want it. You have to prove to the universe. You have to prove to the markets that you want it. You have to put in that extra work, and you have to smash it. There's no other option for that. I promise you. You have to put in that extra work and hard work to learn, and then when you've done it, then you can relax. You're not gonna get anywhere from lying in bed. Like, right, I'm going on one here, but next thing, so fear of missing out, FOMO, whatever you want to call it. This one is a killer, I promise you, because I've had so many trades where I've seen this kind of works with greed as well, and any sort of impulsive kind of thing where you're not really anticipating it. So you see huge move up, and then obviously those huge moves that moves up, maybe it speaks liquidity or like some highs, it's most likely gonna come back down like quite quickly as well. Not all the time, but this is why you get fucked up. So then maybe you see that, oh shit, I can make money from this. Bang, sell, reverse, sell. You've been greedy. You were scared to miss out on this possible massive profit, and then you see price just continue going up, and then you realize fuck, and then you're fucked. So this fear of missing out thing is kind of like this is the way I want to put it, right? You miss a bus, you get the next one. You know what I mean? So if you miss a trade, you hit the next trade. Like there's always fuck. Okay, I'm going back into markets now, seeing if anything's happened. So you miss one trade, it's okay. You get the next trade. There's not going to be one setup ever. Like you're always going to get these setups come in. My market's tweaking out. You're always gonna get these sort of you're always gonna get these opportunities to get entries and stuff like that. So you shouldn't be like, oh shit, I'm gonna miss this out. This is like once in a lifetime opportunity. No, there's always setups on every market. You always get setups. Whatever market you want to do, whatever time frame, there's always setups there. And you're not gonna miss up like a massive once in a lifetime opportunity. You're gonna lose your money. And it's one of those bad habits that you can't really be letting get to you. For this video, that's going to be it. There's just a few things I want to talk about, but I'm aware this video is getting a bit too long, and I know most people have the attention span of a 5-year-old. So this is going to be the end of the video. If you did enjoy these things and you want me to go deeper into any one of these, then I will happily make one whole video on one of these and talk about every single one. I will do a part 2 on this as well, because I still got quite a few more. Because I have them. I did a whole section on my course about them, and I wrote down every single one I could think of, researched about it, did my own kind of take on it. So if you want any information on this, then let me know and I'll make some more videos for it. But that's going to be it. I'll see you in the next video. Goodbye.